Hey guys, welcome back to Rough and Stitch Options Trading. Now, the stock market has been in a range for months now. But here's the thing, sometimes the surface tells one story, while the underlying action tells another. Small dips are being bought, sold the next day, but when we dig deeper, we see signs that institutional investors are quietly reducing their exposure, and retail traders are buying into that and getting trapped in there. That is smart money distribution. Plain old simple smart money distribution. So today we are going to look at three simple charts. We'll look at QQQ, we'll look at SPY, we'll look at RSP, and see what they're all doing, do a comparison between the three of them. Now, to understand this, you need to know the basics first because each of the ETFs, they represent different slices in the market. QQQ, it tracks the biggest tech companies, the likes of Apple, Nvidia, Microsoft, Google, all that stuff. SPY, on the other hand, it represents the broader US stock market. And RSP is an ETF that gives every company in the S&P the same influence. So by comparing the three of these, we can see if this rally is broad based or not. Now, signal number one, let's compare the technology stocks versus the overall stock market. First, we're going to think of it market leadership. Most of the time, we find that technology stocks they often lead the market during strong bull runs. Okay, technology stocks, remember the likes of Microsoft when it hit all time highs. I mean, not right now, but remember when it hit all time highs. Remember that run. Let's look at QQQ. The same thing. Remember, this is when this run, we're looking at QQQ on the weekly time frame. Remember, this run is when everything was making, all stocks, almost everything was making new all-time highs after new all-time highs. Remember, Microsoft rallied to almost about 553. That's what I'm talking about. Technology stocks, they often lead the market during strong bull runs. Think of it. Where are they right now? Just pause and think about it. Where are they right now? They are not leading, so that's signal number one. It's an early signal that smart money is rotating their money elsewhere. Signal number two, are most stocks going up? I mean, we have a couple of them that are going up, just one or two here and there, stocks that are actually doing well. Most of them are not. And during this period of distribution, you'll find you have a good setup, but it's not going to work because of the overall market sentiment. Nothing is going up. It's just all in a chop. This chop that we're talking about. QQQ, that's QQQ. Let's look at SPY. Same thing here. It's just a chop. So even if, think of it this way. So even if you find the indices, they're not dropping as you want them to drop, or they're even to the extent they're even rising while most stocks are not doing well, that is a signal that is a key signal for you. If fewer stocks are participating in a rally, the market is becoming less healthy and more fragile. Now, let's go to signal number three. Are mega caps carrying the market? Think of the likes of Nvidia. Nvidia is a mega cap. Is it holding the market right now? No. Let's look at Nvidia. Nvidia is still about 183. So let's look at SPY. Let's look at RSP because this is where I want to do a comparison that's going to be helpful in understanding this. Here, let's compare SPY and RSP. Remember, SPY, this is where the bigger companies dominate. And RSP, remember, is where every stock in the stock market has an equal influence. If the market is truly strong, both of these should rise together. If the market is strong, both of these should rise together. Remember the tariff dip? Remember SPY? Look at SPY right here. To right here, where we've circled, and then we have the run. Same thing here. Right there, and then we have the run. So, if the market is truly strong, both of these should rise together. What is RSP doing now? It looks like it's starting to do a distribution by itself right here. Compare that with SPY. Same thing, same thing. That's another signal for you to know that it's all an illusion. It's an illusion of strength when there is no strength at all. Now, when you put all these signals together, because it's not just one that proves, oh, a distribution is going on. It's not just one. It's not going to be just QQQ. It's not just going to be SPY. It's not just going to be RSP. Once you gather these signals from all these places and put them together is when everything makes sense. Tech leadership, fewer stocks are participating in the rally, larger companies not carrying the indices. Now, this is a subtle hint that institutions are quietly reducing their risk even as prices remain high. Think of it, SPY and QQQ. Is there anything happening? Nothing, nothing. Even when we thought the whole geopolitical tensions was gonna be it, that was the catalyst that was going to make all this long awaited drop to happen, nothing happened. It was just a minor pullback. But on the background, this is where everything else is happening. Smart money quietly selling into strength and letting retail traders carry these stocks on their back. A small sell, retail traders come in and buy. Because smart money doesn't sell everything all at once. I mean, yes, you do have instances where you have several red days, like right here, several of them, several of them, several of them, because they just can't dump all the way just one long red candle. No, they drop bit by bit, bit by bit. The same signs here were the same signs here. Now, I'm not saying that the stock market is going to crash tomorrow. I'm simply showing that the market's internal strength is changing. I mean, look at what happened in between when we had the geopolitical tensions. Things have gone back up. QQQ dropped to about 592. It's now at 611. SPY, the same thing, right? SPY, the same thing, dropped all the way here. The same support it keeps testing. It's just dancing on the 21. Again, we're even going back higher. Actually, this is even a good thing because it introduces the concept of we need this to push much higher. We need this to push much higher, grab this liquidity that's hanging up here, and maybe then is when we can see the flash because we can't go anywhere. It's like running a marathon. You can't run 3 hours, stop for a minute, and continue running another 1 hour. You just cannot. It's humanly impossible to do that. Even the best marathon runners, they take breaks. And that's the same concept right here. A run, you gotta pause. Heal your body, drink some water, who knows, drink some tea, do something. And now smart money is playing all types of tricks, because at this point, I wouldn't even be surprised if we rally back up and come and test these previous all-time highs and then push further down. That is, at this point, that is what I'm expecting. This tiny rally, or whatever you want to call it, this tiny push happens, prices go further up, and that is what I'm expecting. Buyers, the retail traders, keep pushing the prices back up, and smart money finally, again, selling into strength, because that's the key here of what smart money does. Selling into strength. So my anticipation is that the prices will go further up and then be returned back into this consolidation area. And maybe this is when we can see the drop we need, because we need some type of a pullback to be able to push further up. We need some type of a pullback so that we can, not go like straight up there, but let's redo this so that I make sure people get what I'm saying here. We need some type of a pullback so that we can start ascending higher. At this point, these are all just traps going on here. And like I said, I would not be surprised if we even push higher and make a new all-time high and get beaten back into this box. And maybe that is the only time we may potentially see the drop that we're looking for. Because at this point, I mean, smart money out here playing tricks that we are even finding support at the 21. But like I said, it's all just an illusion. And you have to see behind the smoke screen. Remember that signals I've told you: tech, market breadth. How are all those doing? How is SPY comparing to RSP? So think of it that way. As I keep saying, be cautious. Don't go long on anything right now, because you may just get stopped out tomorrow. You see a good setup, yes, sometimes some of them work, but most of them don't. In this environment, most of them don't. So here's a key little educational nugget from me. Markets, they often look their strongest right before important turning points, because the surface is an illusion. It's deceiving to the retail traders. So that's all I wanted to share with you guys today. Let me know what you think. Do you see the same thing as I am? Smart money distribution. I hope that definition really helped you understand the whole concept of smart money distribution. As always, let me know your thoughts. If you have stock that you want me to have a look at, drop it in the comments. I'll definitely make some time to review that stock. So thank you once again. Catch you on the next one. Bye.